Good morning, all participants. Today topic is corporate restructure, amalgamation, absorption, and reconstruction. Exploring the strategic world of corporate restructuring. Restructuring, we will cover key methods and their financial implications. These tools are essential for growth and efficiency. Corporate restructuring in the sense when the company want to change its operations, finance, and methodology to compete in the market, it will go significant changes in its structure. It's called corporate restructuring. So this is been done. Those companies who are closely monitoring the management changes, they want to see the company to grow constantly, parallelly concentrating on the ongoing trends in the market. So it goes for the major or significant changes in its operations, finance, etc. So this is called corporate restructuring to meet the demand in the market. So basically it will take all the parameters like what is the product's demand in the market, how it is going, whether the demand is according to their expectations and pricing is being done in the competitive market properly, and whether it is meeting the demand and price to get the revenue to increase its profitability. And also it will see if there is any major changes it wants to do, it can go further reduction of the cost. Even it will not think of laying off the employees. Recently we are seeing most of the companies are doing to cut the cost, manpower cost, that is employees reduction, which will give direct impact of reduction its cost by using one tool is called AI. This tool is encouraging all the companies to reduce its cost, manpower cost, that is employees reduction or layoffs, like Google, Amazon, etc. So this is one of the corporate restructuring method or which are being adopted by the companies. Number two is amalgamation. Amalgamation in the sense merging of two or more companies and establishing a new legal entity. That means the, after doing this amalgamation, that is merging of two or three companies, it will establish a new legal entity by dissolving or removing the old company's names. But however, its operations, products, etc. will be used in the legal entity, new legal entity, where it will increase its capacity, revenue, manpower, management, material, machinery, etc. This will improve its profitability, cash flow, and efficiency of its operations from time to time. This amalgamation helps the companies or corporate world by doing or closely observing, monitoring the market trends, market competitions which are going on to meet to be on par with the current scenario in the market. Next is absorption. That is, absorption means merging or taking over of one company by the other company. For example, we are seeing recently Satyam computers were there, which was taken over by the Kotak Mahindra, that is Tech Mahindra, and it has been named as name is Tech Mahindra Company, which was taken over by the Kotak Mahindra or Mahindra and Mahindra Group company. Now its new name is Tech Mahindra. We have seen it has taken over its assets, liabilities, employees, places, properties, etc. This process of absorption will definitely help the company to increase its wings or expand its operations, manpower, land, properties, profit, etc. This absorption helps the companies by increasing its manpower and reconstruction. Reconstruction is a process where all these processes like amalgamation, absorption put together is called reconstruction. Reconstruction of manpower, that means shuffling the manpower properly used in the proper places, proper departments, and all the properties where they want to utilize to the maximum extent. That is to increase to improve its efficiency in its operations and increase its profits. Thereby, it will expand its businesses across the countries and globe. Normally, it will be taken over by the. We are seeing recently there are so many companies like Amazon, which they want to still expand its businesses in India by investing another additional 2000 crores in India. That means it is nothing but expanding its businesses, including not only other countries of the world, but still they want to focus in India because they have seen the potential market in India is increasing rapidly comparatively with China, Bangladesh, etc. And also, L&T is a multinational company which is also focusing India in its all the divisions like mining, national highway construction, roads, flyover bridges, petroleum, etc. This comes under the category of amalgamation, absorption, and reconstruction process. Next, this introduction to corporate restructuring helps significant changes to a company's structure or operations. This main objective of the company is to enhance its shareholders' value and improve operational efficiency. What are the key drives? Market consolidation, competitive pressure, economic cycles. In order to meet or compete with the competitors in the market and sustain to the competitive pressure, it will have this restructuring process. Deal value. Deal value is nothing but average of merging and acquisition deals, which was valued in 2023, was over $100 million globally. This normally encourages all corporate companies to do such type of process by closely monitoring its company's operations. Next, definition of two or more companies, that is amalgamation, absorption for entities. Two or more companies combine to form a new entity. What are its characteristics? Both original companies ceases to exist. That means the companies will still exist after doing this process. The purpose of doing this is to achieve economies of scale and eliminate competition, which will lead to financial impact, merged balance sheet, combined assets, and its liabilities. Mergers through absorption. An absorption is a combination of two or more companies into an existing companies. All companies except one lose company or their identity. For example, we have seen Tech Mahindra has taken over Satyam Computers by absorbing it or merging it with its already existed companies. Hence, this has helped a company to grow substantially because manpower force has gone up and its assets has also added to its balance sheet. Hence, the balance sheet has been combined and prepared every year. Absorption, so one company survives. One company acquires another with acquirer continuing to exist. That means the person who is absorbing the other company, it will exist. The characteristics of the company or acquiring company maintains its legal identity and name. So there will not be any change in its legal entity and name. The very purpose of this process is to rapidly increase in the market entry or acquisition of specific assets. If the company wants to acquire or purchase, it will do specific assets also because it want to achieve its goals as given our expectations which was done earlier, and this will have financial impact also. Acquirers balance sheet incorporates acquired assets or liabilities because it has to meet its goals as per its expectations. Internal reconstruction addresses accumulated losses or overvalued assets. This process cleans the balance sheet, for instance, reducing share capital by $50 million to offset losses. That means it will restructure its balance sheet by doing some adjustments or wherever it is required to write off the losses, it will write off its losses in the balance sheet over a period of time as per the advices taken by the financial chartered accountants or professionals, we can call it. Because professionals like chartered accountants will help them in this process. Reorganization of a single company's capital structure. This will help the process to reorganize its capital structure, putting at one place in proper place. And the characteristics of the company continues its operations under same legal identity. The purpose of this is to restore its financial health and improve the balance sheet appearance. Balance sheet appearance in the sense the investors or stakeholders or shareholders will always see the profitability or earnings per share of the company by referring the balance sheet which was improved to the earlier balance sheet comparatively. And these methods of doing this will help in the reduction of share capital or revaluation of the assets. The process will indirectly help the company in revaluation of the assets automatically. Key distinctions and similarities. Entities involved are two plus two, one new. One acquires the other. And this one acquires the other will become one restructured. The original entity survival, none, and acquirer survives. That means the company which has acquired will survive. Original survivor will not exist. Third one is primary objective of this company or this process is to grow and consolidate the data, information, material, manpower, management, money. That is capital. So this will lead to dominate the market by capturing the maximum potential demand of the market by its assets also. Financial, this process will help to rehabilitate its financial position from existing position. Coming to the strategic considerations and implications. Let us see what are the strategic considerations. Number one is synergy potential. Synergy potentials, that is amalgamation, absorption, targets cost savings and revenue enhancements. Cost saving in the sense when it will amalgamate, absorb the other company, it will definitely reduce its research and development cost further, which it will not invest in the market to know who are my new customers, what are my products. It will not study again because it has observed a company which is already in the operational, which is going on business. So it will reduce its cost savings. Next, coming to the properties, the company already having so many properties which are in the name of the company which was observed by this company. So it has reduced its savings, and indirectly when it has reduced its cost, definitely the revenue or profit will go up automatically. Next, by this process, the absorbed company or absorbed which has done this process, it will help its health financially. That is restructuring. Restructuring improves debt to equity ratio by 20 to 40%. The process of reconstruction will help the company to improve its equity. That means the equity will grow drastically, rapidly by 20 to 40% without our additional research or development cost. Next, what are its regulatory landscape? Antitrust and government approvals are critical for transactions, as these processes are under the influence of regulatory landscapes. That is, it will prevent all anti elements or anti processors which are having any issues with the company will be eliminated, because government will not give the approvals to these companies, because it will check all the regulatory norms are being followed by the company, and then only it will give its approval. So it takes a little extra time. That is called critical to get these transactions approved. Next, tax implication of these companies. Significant tax considerations can alter deal value by 5 to 10%. When the companies which are taking over process has been done, the company will give little leverage, that is 5 to 10% tax benefits will be given. So this tax implications will help the company because it is giving the other company to take over. Next, integration challenges. What are the integration challenges? Post-merger integration failures destroy 50 to 70% of merger and acquisition value. So this will definitely lead all processes to 50 to 70% of the M&A value. Conclusion of the topic is tools for corporate evaluation. Amalgamation, absorption, and internal reconstruction are distinct tools. Each serves specific strategic objectives like growth or financial health. Successful implementation. That means when we have done properly all the processes in time according to the advice or experts, this will help them to improve successful implementation, and demands meticulous planning and financial acumen. These processes are vital for companies to adapt and thrive. Thank you, madam, for giving me this opportunity to talk on this.